This is Dr. Guru from Ahan Analytics with the Market Breadth. Two big items for me for this past week of trading in the financial markets. Number one is the reemergence of oil as a catalyst to move stocks back and forth, up and down. And of course, the catalyst for oil is the resumption of the war against Iran. The presumed or supposed ceasefire is now officially over, and it doesn't look like there's any appetite to fake a new ceasefire. Now, we don't know how, when, where, why, or how the war is going to unfold from here. And I think it's pointless to guess and predict things. I ignore all such prognostications. But what I do know is that it creates a certain element of additional uncertainty that right now the market is ignoring, but it is a factor and a wild card to keep in mind that at any time there could be some wild gyrations. But since the market overall is in this bullish mode and it's pretty much in the mode to ignore just about any and all bad news, I still think that dips created by bad news that should be temporary should be bought or will be buyable in this moment, not permanently. And of course, if the news is bad enough, we can expect more sustained selling. But the VIX, the volatility index, is confirming complacency, the kind of complacency that's supportive of a bull market. But it also, on the flip side, creates a little bit of fragility because as soon as the market does care about some bad news, we could get very swift moves down. And then I'll call a third point, kind of part, maybe sub bullet of the theme for this week, is that you could see more of the shakiness in the AI trade. Now, there were some strong rebounds, but I really don't like this up big one day, down big another day, up big another day. It's great for day traders, but it says there's a lot of jitteriness in the AI trade right now, and we don't know which way it's going to resolve, but I am on alert for more and more breakdowns to occur, and some breakdowns have occurred for sure. All right, let's dive into the charts and see what this market looked like in pictures. All right, let's start with my favorite technical indicator, the percentage stocks trading above their 50-day moving averages, what I like to call AT54 above the 50. For once, there is no new news here. It's just hanging out and it's hanging in there just as I suspected. It's just going to be bouncing up and down. No new news there. Nothing to impute from the action of the percentage stocks trading above their 50-day moving averages. Same thing with the percentage of stocks trading above their 200-day moving averages, what I like to call AT200. It also is just churning about as long as it stays above this 56% or so cycle pivot point, or maybe its support. I'm all good. I mentioned earlier that the VIX, the volatility index, is supportive of a bullish market where nobody cares about anything. And here is the VIX. Let me just scroll through here for some context. It closed today at 15.02%. It is now at it's almost at a low for the year. Now imagine all the things we've been through in 2026, and the VIX is almost back to its low for the year. That tells you plenty. But just to reiterate, while this supports a bullish sentiment in the market because everyone's complacent, doesn't care about bad news, the minute some bad news does come that people care about, I expect the VIX, of course, to spike extremely high. For instance, like we had on June 5th, when the VIX soared 39.7%, essentially 40%. And actually, honestly, I can't even remember why it jumped up. See, that's how how much a low VIX does. You just forget about whatever was the bad news going into the current era. Okay, let's go to the indices. S&P 500. It has now jumped above the former double top, so it is back in clear bullish territory. Let me just zoom in here so you could take a look. This is what I was talking about. This purple line here was the formal double top. The S&P 500 took its time, but it did move higher. And I am bullishly positioned in the S&P 500 as a result, and I expect it to finally punch out to new all-time highs soon. You could see the upper Bollinger Band is starting to curl outwards, and that is also supportive, and the lower Bollinger Band is curling upwards. So this is sort of like a think of it as like pressure that's biasing price action higher. And then the NASDAQ also is getting a little bit more constructive. It still has a lot of work to do. It's still well off its all-time high. It hasn't even got above the previous peak. But look, it is peeling away from its 50-day moving average, which is this red line here. So in fact, let me just make it very clear what I'm talking about. This is the general movement right now, short-term movement of the NASDAQ. Some people will draw triangles and wedges and things, but I don't think all that is necessary. You could see the general bias to higher prices. And then IWM, the ETF of small caps, it too remains in bullish territory. This week was really churning. It did break down below its 20-day moving average, which is this dash line here. But it created this hammer. Hammer is a candlestick pattern that's indicative of a trend reversal. The trend reversal we're talking about here is this very slight downtrend, and this hammer brought it to an end. And now you can see the IWM is creeping up, even though it did close down on Friday. It looks like it's ready to hold this 20-day moving average uptrend a little bit. Now, for those of you who are very technically minded, notice that the Bollinger Bands are starting to pinch in on themselves. We call this a Bollinger Band squeeze. That often is the precursor of a big move up or down, and the resolution of the breakout or the breakdown is typically sustained. So I am on alert for that. In the meantime, I am going into the coming week with some IWM call options. All right, let's jump into individual stocks and indices. Let's start with oil. Like I said, oil has now suddenly come back into the fore as a catalyst. We were enjoying it falling almost straight down from middle of May. Let me again do these arrows from the middle of May down to the early July. But then the resumption of war got oil moving again. And then you can see here very conveniently, this downtrending 20-day moving average held as resistance. It's kind of amazing that a market as big as oil can still be traded from a technical level using a proxy like the United States Oil Fund, which is USO. So you can see here the 20-day moving average held as resistance 3 days in a row. And that is representative of the market now starting to care much, much less about oil and anticipating lower oil prices at some point in the future. So while yes, oil is a negative is newly a negative catalyst, the market is carrying in some places and not so much in others. And you could see that play out in some of the charts I'm about to show. So for instance, interest rates, TLT, the iShares 20+ year Treasury bond ETF. Inflation fear, higher oil has brought inflation fears back into the fore. The labor report has also stayed relatively strong, so that's helped put pressure on TLT. So lower prices means higher bond yields. And now TLT finds itself back towards its lows, heading towards its lows that it made in May when oil was at its peak. Now, I suspect this is about as low as TLT is going to get, and a rebound is coming unless there's a fresh catalyst to get oil to move upwards. But overall, I think inflation is still a concern. It's just that the market has not really cared much about it, except for the bond market. All right, so oil in the previous phase was making investors and traders concerned about pinching the wallets of consumers. Here is Brinker International, ticker symbol EAT, casual dining restaurant. You can see that it has gone straight up now since oil peaked. It's been very sneaky because there have been some days when EAT has come down sharply on a 1 or 2 day pullback, but the overall movement here, and let me just draw an arrow, has been up. In fact, so much so up, if I pull back, you can see it's now challenging its all-time highs, which formed a sort of double top earlier. So, and actually EAT did break out briefly because it almost hit 190 and then faded back. So I am definitely on alert to see what ticker symbol EAT is going to do. DoorDash, ticker symbol DASH. I love to check in. I think of this as the luxury brand for the common consumer because Dash's convenience is great, but when there's trouble, I expect that consumers will pull back from DoorDash. Now, this didn't prove out true for quite some time. I was always amazed at how resilient Dash had been for years, starting with the bottom in 2023. But now that resilience is starting to break down, so this does keep me interested. So ever since it broke down 17.5% back in November 2025, the stock has not been the same. And yes, it seems to have bottomed out here in 2026 between uh, March's low, and this is May's low, and then June's low, so kind of a triple bottom. But we have the 200-day moving average is blue line holding as tight resistance. I did have a position in Dash. I sold it right at 200-day moving average resistance, but I'm still keeping an eye on it in case it does break out and become bullish. Costco is a consumer brand, of course. This one is starting to trouble me. I'm surprised that Costco is breaking down. It looks ready now to retest the lows from late last year. That would be disappointing because I had played this pretty well for this big breakout, and now almost everything has been reversed, and I've even bought a little bit around here at the 200-day moving average to add to my position. Not sure how to explain Costco in terms of the overall macro themes that I talked about earlier, but Costco, of course, is an expensive stock, and at any time, investors, traders can decide that they don't want to pay up and want to move money to another position. And just as a reminder, Costco broke out to this all-time high. So this is a very bearish move that it's now below its 200-day moving average because it re-emphasized just how much of a fake out this near parabolic move was to the all-time high. And now Costco has gone almost straight down from what is this, almost 1100 all the way back down to 900. So that's almost even a bear market if you're just measuring from the all-time highs. All right, let's move on. Always got to talk about the semiconductor or the AI trade and semiconductor trade in particular. So I talked about things getting a little toppy and a little wary. Well, VanEck Semiconductor ETF, ticker symbol SMH, it looked like it was ready to roll over, confirm a rollover with this 50-day moving average breakdown, but buyers recovered it, and it stalled out at the 20-day moving average. So semiconductor ETF, ticker symbol SMH, is still hanging in there, still bullish, and it is not confirmed a breakdown. However, we do have DRAM, which is the Round Hill Memory ETF, ticker symbol DRAM, which also is acting just like semiconductors and holding on to the 50-day moving average. It's been a great trade off of these support levels, but I decided not to get into a position on the latest small pullback on Friday. Now, individual semiconductor names, however, are revealing a more dynamic and richer story. And I talked about how I don't like the way things are moving up and down by big chunks. Applied Materials, ticker symbol AMAT, is one of those. On Tuesday, July 7th, which was a big down day for the AI trade. It was just, there was no real news. It was just profit taking day, just swept over the market. Applied Material was a big victim of that, dropped 6.6%, 6.5%. But then the next day, it was up 2.9% and then gapped really high on Thursday, but then it faded. So I think it's starting to, and here's the arrow just to show you what I was talking about, this move, and now this move. The stock looks like it's stabilizing. I am interested in buying it if it tests its 50-day moving average. Then we have Teradyne, ticker symbol TER. It has broken down below its 50-day moving average. And there are other semiconductor stocks in this same boat. Now, notice that Teradyne has survived multiple breakdowns below the 50-day moving average since March. But how many breakdowns can it continue to hold, particularly for a stock that hadn't even traded below its 50-day moving average since down here about a little over a year ago in May of 2025? In other words, I think Teradyne could be a candidate for rolling over. And I'm going to draw this line in here just to show what I was talking about. So this is the beginning of what could be a rollover with all of these multiple 50-day moving average breakdowns. All right. So that's something for everyone to keep an eye on. All right, let's keep it moving. Marvell Technology, ticker symbol MRVL, another semiconductor stock. It is clinging to 50-day moving average support. Let me just zoom in here. So this is another critical stock to keep an eye on, particularly because it is filling a gap from, what was this, early June. June 2nd, it gapped higher by 32%. And the market is slowly but surely erasing all of those gains of celebration. I forgot the exact news. Oh, right, here it is. The news was that Jensen Huang called Marvell the next trillion-dollar company. So clearly that catalyst is starting to wear down, and that's another cautionary tale. Now let's move on to some untraditional, some what I call ancillary or adjacent AI plays. Caterpillar, ticker symbol CAT, has become one of those because of the the construction of data centers and the need for generators. Michael Burry called it a short, and the stock promptly fell from all-time highs. It dropped 6.9%. The stock hasn't been the same, but look at this. The 50-day moving average is holding on as support. Let me put that in green, make it clear. And that is a good sign. And I went ahead and got a call spread in anticipation of that support holding. Now, the upside may be limited because the market did respond so readily and negatively to the Michael Burry short. But, as always, we will see what happens. Another ancillary or adjacent AI play is Everest Construction Group, ticker symbol ECG. I had long been in this stock as a replacement for getting out of Vertiv, ticker symbol VRT, and I finally had to let go of it when it broke down below the 50-day moving average and confirmed that breakdown with this move here. This is definitely a stock that looks like it's topped out. If I draw, this is the this was the all-time high right there. That's one top, and then we have another top over here that preceded the 50-day moving average breakdown. And in fact, this top fell short of the all-time high. That's why I'm very wary. Went ahead and took the remaining of my protected the rest of my profits, and I'm out of this position. But this is another sign that's making me wary about at least the stocks that have been on a tear, for a while. And ECG was definitely one of those stocks. It more than tripled in less than a year or a little over a year. All right, let's look at some other adjacent plays. I have Solstice Advanced Materials, ticker symbol SOLS. I only showed this one because this is what can happen when a company decides that it's going to take its expensive stock and buy other companies. The stock promptly fell 15%, and it hasn't been the same. So this is a bearish stock. The IPO was just late last year, so I'm sure this acquisition took investors by surprise, not realizing that they invested in this company to allow them to already start making big acquisitions. Still, I am looking for some stabilization. It is starting to show up here. If you look at sort of the bounces off of the intraday lows here, that is the potential beginning of a bottom. So I'll be looking to see if that support can hold, presumed support. And then we have Element Solutions, which is the company ESI that Solstice agreed to buy. Strangely enough, it has come down along with the stock. So both of these stocks fell on the news. Very odd, very concerning. ESI is now just as bearish as Solstice is in terms of confirming a 50-day moving average breakdown. It's very rare to see that. That's why I put that one up there. All right, let's go to cybersecurity, Palo Alto Networks, ticker symbol PANW. Showing this one just because the run-up has been so strong in Palo Alto Networks, and it looks like it's come to an end right here. This is a sharp reversal from the all-time high, 5.7%, and sellers have continued to put on the pressure. Of course, overall, Palo Alto Networks still looks good in terms of its breakout, but just remember, it's been on a hot run and overdue for some cooling. All right, here is CME, one of my favorite financials, CME Group, ticker symbol CME. I'm hoping it's starting to bottom a little bit here. And just as a reminder, CME has been a great stock for me. It's had a good run for quite some time. I've invested in it as a way to participate in increasing financial products, particularly allowing people to bet on all sorts of things and a way to bet on people chasing volatility. The biggest problem here, I think, in this breakdown has been this debate and controversy over perpetual futures. CME is not in them yet, and people think that perpetual futures will greatly undermine the business for CME Group. I, of course, love this controversy because it gives me a chance to buy CME cheaper. because I think it will be just fine over the long term. Relatedly, CBOE, global markets, ticker symbol CBOE, has similarly been declining. It actually has had an even more convincing strong run than CME. So I have CBOE on my radar as a stock to finally get into, much cheaper than I could have gotten it just 2 months ago. And you can see it has a similar pattern right now, breaking down along with CME. It is also in bearish territory. So I'm just, because I already have a big position in CME, I can be patient and wait for CBOE to become more bullish and get above these moving averages. Let's move on to Meta. Meta Platforms, ticker symbol META. Last week, I wrote bearishly about the implications of it building a cloud business, looking to sell access to AI compute. It looked like Meta was throwing up its hands about its AI business. And now suddenly the market sentiment has completely changed. Big move up on Thursday. Huge move, 4.7%, led to this 200-day moving average breakout. Very clean breakout, 6.0%. It is overextended to the upside because it's well above its upper Bollinger Band, but the sentiment has clearly changed in Meta. The bearishness may be coming to an end slowly but surely, but just as a reminder, Meta has gone nowhere for almost 2 years. So if a breakout is coming, there's a lot of pent-up energy, coiled with like a coiled spring, that could propel Meta to 1,000 very quickly on a breakout. So I am keeping a close eye on this. Another coiled spring, Tesla, ticker symbol TSLA. I mentioned the trade in last week that I put on Tesla. It immediately, just as I was hoping, the big drop at the end of last week, 7.5%, was almost completely reversed. At the open of this week, Tesla moved up 7%, almost 7%. Took me out of my calendar call position profitably. I was all good with that. And then the sellers, interestingly, promptly came right back into Tesla. Let me put it these arrows so you can see what I'm talking about. This was the big down day, then big reversal to start the week. Sellers came back in, but look at this. They could not get Tesla any lower. That was my signal. As soon as I saw the buyers show up on Thursday, I jumped into another calendar call spread, and I was fortunate enough to get this nice move right to the short side of the calendar call spread. It took me out at another profit. If Tesla is just going to be a trading range play, that's all good because it has some very defined moves where the sellers have not been able to keep Tesla down. But here's as a reminder, this is another stock that has been going nowhere for quite some time. Depending on how you want to draw the lines, Tesla basically hasn't gone anywhere since 2021. And you could even make an argument for it's been in a trading range since 2020, so for 5 to 6 years. So range-bound trading makes a lot of sense depending upon your frame of reference. Another transportation stock, Hertz, ticker symbol HTZ. This is just a quick follow-up. Sellers continue to take down this stock. This stock offering really must be extremely hated. When it was first announced, it took Hertz down 40.7%, and people have been clamoring to get out of it ever since. And you can see this high volume suggesting that, there is a lot of exiting going on. Just as a reminder, Hertz has been a pretty bad stock for quite some time. And now it's reaching back to, I guess it's almost getting to pandemic lows. I don't see any reason to get into this unless a positive catalyst shows up. This is one I would not dare to just speculate on a bottom. And finally, in terms of tired plays that were previously pretty strong, this is the VanEck Rare Earth and Strategic Metals ETF. Without this is ticker symbol REMX, without rare metals being or rare earths being right front and center in terms of the headlines, interest does tend to wane in this sector, and that's exactly what's happened. It last peaked out at an all-time high late April, and just as a reminder where REMX has been, it still hasn't got back to, it hasn't got back to its all-time high. I should have said that it's fallen from its previous high, so it's fallen short of the all-time high. This means that the opportunity space is pretty much capped out for REMX, and now it's bearish below its 200-day moving average. This has had an impact on, I think I'm in one last rare earth play. I exited most of my others, some of the profits, some I had to cap losses on. But I just want to remind you that this is another topping pattern in a sector that was formerly all the rage. And just to make it clear, let me draw my little curve there, and there is the topping pattern. And here's the perspective, right? Below the 200-day moving average is always going to be bearish in my technical book. All right. This again is Dr. Duru. Thank you for checking this out. Just as a quick summary and recap, oil has become a new catalyst, and that's because of the resumption of war, the end of the ceasefire. But overall, the market remains bullish. It is still in a mode to ignore bad news. And that is what we roll with as a trader and as a shorter term investor until proven otherwise. If you have any comments or questions, put them down below. As always, like and share this content so the algorithm knows what's up. And subscribe to this channel if you want more content like this. This is Dr. Duru. Thank you for checking me out, and have a good one and a good weekend. And let's get the next week started well. All right. Take care.